It's great to have you, and thanks for
coming.
Great
to be here. Thanks for the invite.
So there's been so much hand-wringing, right, in the wake of, I guess, mostly multiple expansion, right?
Yep.
The revisions haven't sort of ratified that. What is the thinking on this, on tech specifically right now?
Sure. So on tech specifically, we are very bullish as we sit here today. But as we talk with our clients and investors, we do want people to be balanced. So you have seen stocks move up pretty dramatically. My boss likes to say we've had a good year in January, for the whole year. But on the other hand, when you look at the opportunities ahead of us and where cash flows are and where estimates are, it's actually very reasonable right now. So, we're talking to people about keeping their exposures up, but being cognizant of where things have moved and trying to be balanced across the portfolio.
Right. Is the sense that, okay, we've seen a return to cost discipline and some headcount reduction and even some CapEx trimming, but that there's more to go in that department?
Yeah, so we think broadly most of that is probably behind us. What we are focused on, though, is companies that you're seeing this inflection in cash flow growth as they move forward. So we really want management teams that are being disciplined, that are focused on driving not only top-line growth, but operating margin growth as well. And there's really some interesting companies out there that are doing both and are set up very well as we sit here today.
Either names or sectors?
Sure.
That
so
fit that?
One of the areas that we're probably most excited about as we look across the balance of this year into next year is actually the digital advertising space. So it's an area that's been under extreme pressure as, they were the first into kind of the muck between the changes in IDFA and, what you've seen from slowing economic growth. But we actually think that sets them up to actually have a pretty good back half of the year and into next year. So a name specifically that we really like is Snap. The stock's been under some pressure. They're doing, they were one of the first to take cost actions and to rationalize their business. We think that they have a potential to generate close to $1 billion of free cash flow next year, and that the market's missing that. From a product standpoint, they're doing all the right things, and so we feel pretty encouraged about that.
That's interesting. I know some of the agencies, Omnicom's at an all-time high today, but if we can get programmatic to work, that would be a shift.
And the direct response side, too.
Right.
Another name in the ad space that we like a lot is The Trade Desk, which is that essentially the Bloomberg or the operating system for advertisers and really, have a great exposure to CTV and the growth in that marketplace. But so it's a space that we're actively excited about as we sit here today.
Software, you mentioned names like HubSpot. What do those kinds of companies have going for them?
Yeah, so the discussion today has been a lot around the chat GPT and what's happening in AI. The thing that has me most excited is how these technologies are going to influence software companies in the app space specifically over the coming years. So you can see lots of optionality about how they can use these technologies to improve their retention rates, to drive up, ARPUs and things like that. So with this class of growth software names, so HubSpot would be one, Procore, UiPath, they're all growing reasonably well. Their margins are all turning up and moving in a positive direction. And we feel good about the sustainability of growth and where the absolute valuations are. Sure, they're a turn or two higher than they were in the depths of things back in October, but they're still well below historical means and historical averages.
Right. So. Finally, let's turn to semis. Yeah. This is like the most puzzling of all, because there is a school of thought that says we're anticipating peak inventory, we're anticipating trough price. You think it's safe to buy some of the semi-caps?
I do. And, the thing with semi-caps right now is you've seen the big reductions in expectations because of memory CapEx pulling in. But as we look ahead, you start to think about what's going to happen with the CHIPS Act, what's going to happen with reshoring semi-capacity. And there's an incredible need to build more capacity and build more onshore capacity. We think that benefits the big vendors. KLA would be one that we'd specifically call out as having really attractive opportunities in front of them.
And then restrictions on China, we can deal with it?
Yeah, so it's interesting. Like, we've long been believers in China as an opportunity, as an investment space, second largest economy, growing fast. From the semi-cap equipment space, they will be able to deal with the increased scrutiny and regulations around that. We think there's real opportunities, though, to invest in China and to take advantage of that market with companies that are exposed and focused on the domestic expansion in China.
Right.
So a bunch of software there that we really like.
Yeah,
so.
And we'll hear more about domestic production here pretty soon.
Yes.
Brook, thanks so much.
Thanks for having me on. It's been great.
Brook, Dane joining us. John?
Yep. Carl, meanwhile, we want to check on Alphabet. It's just off the session lows. It was down nearly 9%. It's off about 8.5%. Of course, this comes the day after what we've been talking